Hey guys, it's me again on Friday as usually, February 14th. It's time to evaluate our portfolio and talk about market. Let's start with market. So this week market shoot up and right now close to all-time high. Volatility dropped down from approximately 16.5, now it's around 15, so 1.5 points down. So our account is also in all-time high, which is good. We in February already make approximately 1%. It's not as good as it was on January. I remind that in January we made approximately 4%, but it was because IV structure of the market was changed in our favor. Usually after that, profitability slowed down, but it's still in our acceptable range because our range approximately, we're happy if we get 2% per month. So now we got 1% in 2 weeks. We'll see what's gonna happen next week. Should be okay. Uh, let's talk about our portfolio. This is how it's look like. We're talking about our total positions in ES futures options. Uh, we're up this week, how I said, and it's looked very safe as usual. Let's talk about our separate positions. First, as usual, we will start with our balalaika trade. This is how it's looked like. Our short puts is at 35 DT and about delta 6. Maybe next week, if market won't drop down and delta will drop to 3, it will be a trigger to roll it out and up. If not, we're gonna keep holding them until it will be 15 days till expiration, and we will do it after that. I would like to remind that we wouldn't like to keep it closer than 2 weeks till expiration just to avoid extra gamma risks. Next, our three income positions and CDHs. It's performing very well. Just today, finally, we improved our CDH2. Oh, sorry, CDH1. Let me show you. So we did roll of our naked puts because it's reached delta 3. We roll it, let me show that. It was income 2, I believe. Yes. So we did roll today of naked puts to 56 DTE. Unfortunately, Option.Not Explorer doesn't have 60 DTE available now. Next one is 75, so we opened 56 and did it at delta 9.5, I guess. Right now it's approximately 8.7. So it's a perfect spot. We got very good credit for that. Approximately for 2 options we got 32 points credit, and as you know, we use usually half of that credit for improving our existing hedges. So it was a time to improve our CDH1. So what we did, we roll up our 3 longs. Let me show how it's look like now. It's very, very solid hedge now after improvement. It has a 3.5 negative delta. And right now, distance between our shorts and longs is 550 points. So it's a good hedge. So what we did, we roll up our longs. I believe it was 150 points. So yes, it was before 400 points between shorts and longs. Now it's 550. That's how it's looked like. Also, if you remember, we rolled, I believe, a week ago, income one position for the same reason. It's reached delta 3, so we roll it. Right now it is at 49 DTE. So, and at delta 7.7. This is how it's looked like. Let me show you how all three of them with CDHs look like and how much we make money from it. Here it is. It's only a little bit more than months since we opened it, and it's already 4,300, 4,400 and plus. So that's how it's looked like. But if you remember, we should actually evaluate it together with our old hedges, which remains from closed ladder positions A, B, and C. I would like to add them just to see how it's look like. Here it is. It's a huge profit, 15,492 days. It's a pretty good result, I guess, and it's still looking safe. Has approximately delta 12 with theta 86 point. What else do we have from in our portfolio? We have a couple of violin positions, V8, which is right now shorts 35 days till expiration, and it's already below delta 5. So if you remember our rule, if our shorts below delta 5 and at the same time it's less than 30 DT left, we usually adjust our delta hedge, which is part of this strategy, to increase our profitability. So probably next week it will be candidate to roll down our longs 100 points and make it even more profitable in the future. So right now it's approximately $900 in profit. V9, it's a newer position. If you remember, we closed V7 with full profit, and at the same time we opened V9. So it's only 8 days since we opened it, and it's performed as expected, slowly make money. Right now it's about $300 in profit, and we will continue to hold it and see. One more thing, if you remember, we this week started brand new strategy, which we named Kazoo strategy. It's a very, very good and simple strategy, especially for new people, because it's using all our philosophy of trading, but at the same time it's simple because you don't need to worry here about rolling your naked puts. You don't need to worry about adjusting and improving your hedges. We just follow strict rules. It's a mechanical strategy, and I think it's gonna work well, especially in our environment this year, where I don't expect that market will go up much, and I don't think it's gonna collapse a lot. So I expecting that it will trade in some kind of ranges, and this strategy perfect for this environment. So let me, first of all, I create this strategy for two different portfolio sizes. For small portfolio, less than 30,000, because lots of new guys have a small account, so we had to find a way to make money for these guys, and I'm happy now that you have a tool to enjoy our Discord. So, and another one I did for a bigger account. I believe that account should be at least 50,000 for tested trade. So let's see first for big account. So we open 3 tranches at the same time just because we started. Later we will just close them according to our rules and open new one every time. When as soon as we close tranche, we will open the new one. So now this is how it looked like. It's just 4 days till we started, and it's already going pretty good, showing pretty good profit. It's about $600 in profit, which is, I believe, it's 1%, something like that, just in 4 days, which is extremely good result. And now it show, all 3 of them show a small positive delta, about 2.6 right now. It's OptionNet Explorer delta, which is for SPX. If you evaluate your delta weighted to SPY, so it's going to be 10 times more, so it will be 25 delta. And let me show you our 3 tranches of position for small account. This is how it looks like. It's also in profit, little bit less, of course, because it's much less position and much less margin, and it show very good $400 in profit, which percentage-wise even better than a bigger account, because here it's I believe it's just margin approximately altogether 3 tranches about $15,000, so it's 2.5% in 4 days, so it's pretty good. That's it for ES. Let's see our MES position, MES strategy, which is wheel strategy, if you remember. And just to remind, we have 3 different expirations for MES. The first one, it's soon to be expired. It's just 7 days left till expiration. Will expire next Friday. It's extremely safe. It's reached our tail profit long time ago, but we continue to hold it as additional protection for our new tranches, which is longer term, because if market decline, this tranche will make even more and compensate potential loss of new tranches. So this one is 7 days till expiration. The second one is 35 days till expiration, also in very good condition, very profitable. We almost reach our tail profit. We already start reducing our short puts to make it more protective for the last tranche, which is longer term. I'll show you the third one. We just started it 4 days ago. It's just a first ratio spread, 1 to 3, 1 long, 3 shorts. So it's showing already in 4 days $300 in profit. It's not 300, it's $30 in profit, because OptionNet Explorer doesn't follow micro ES, so we have to open it here for regular ES position, which is 10 times bigger. So it's actually just $30 in profit, but don't forget that that ratio spread has margin just $1,000. So it's how much is that? It's 30%, 30% in 4 days, which is extremely good. So on Monday, on Tuesday, because Monday looks like it's gonna be a holiday, we will add more more ratio to this tranche. Again, it's gonna be 1 long, 3 shorts. We will increase our profitability tent, we will increase our tail profit, and continue to add to this expiration, and probably to at the same time to control our margin and reduce risk. We will close more shorts of our second tranche. Right now we already closed 2, probably at least we'll close another one here. So this is how it's gonna look like. So it's to reduce delta from 3 to 1.5, so 2 times. This is our plans for next week. If market won't drop down, it's gonna be lots of trades. I forgot to show you one more trade which we have in our ES, and it's gonna be also a candidate for rolling next week. It is a ladder D, which we're still keeping as a ladder. Let me show you. Yeah, this is how it's look like. And why it's candidate for roll? Because our shorts is 21 DTE, but it's already at delta 4.2. So it's gonna be rolled at least end of next week, because it will be 14 days till expiration, which trigger our roll, or it will be at delta 3, which also a trigger for roll. So we're gonna roll it out and use again 50%, approximately 50% of credit to improve our hedges, or add one more vertical to make it even safer. What else do we have? We have oil position, which is also 1 to 3 ratio spread. You can see it's already virtually reached a tail profit, which is extremely good. It is 61 days till expiration, and we opened it when it was 83 days till expiration. It's just 22 days passed and we already reached our tail profit. Why it happened? Because we opened that position in very good time when IV was elevated. Now it's cooled down, and we got our profit line jump up. So it's up to you guys. You can close it if you need more margin for other position, or you can hold it. It's still potential, I guess, to get a little bit more. Or if you have extra margin, you can add another 1 to 3 ratios, the same way as we do it on our MES strategy. Also, we have TLT position. It's performing extremely well after TLT bounce up from 85. It went up to 90, now it's around 87, 88, and we are in good profit. some guys was assigned this week because it was very short, just 7 days till expiration left, our closest expiration, and short puts was in the money. They were assigned at good time because after that TLT start going up, and they had a chance to sell it, that long shares, for good profit and replace it back to in the money short puts. Right now we still hold 3 short calls, which approximately cost nothing. It could be closed now. It's just a 2 cents, 2.5 cents. Close it, and if you remember previous week we opened new short calls at 60, I believe 62 days till expiration. This one we opened 2 short calls at strike 90, and this is what we're gonna do. We continue to add short puts and short calls to increase profit. You know that beauty of asset like TLT, that cannot go one direction for very long time. So sooner or later it will bounce up because it's bonds. And even when market is nervous, it's even better for us for this strategy because IV is elevated and options price at much better than before, and we sell that options and get additional payment for that risk. So yes, it's pretty good. That's it for today. We cover everything. I just in Discord channel, it's still some guys worrying about our CDH hedges, which how I explain, it's not a hedge at the beginning, it's just an engagement for hedges, which should be improved later. I just would like to show you my personal CDHs, which I already improved 3 times. Why? Because it's a little bit older than yours, and I would like to show you how it's look like now after improvement. Yeah, I have 3 of them together. I will add. Here it is. Well, you can see that it's a huge 38 negative delta. It's a perfect hedge after improvement. And I would like to show you a trick. You can see here probably I have 11 longs here. If we close that 11 longs, you see we still have negative delta. What does that mean? It means that if markets start collapsing, I have possibility to close 11 longs to pay for, to get credit from them and pay for rolls of my naked puts. My naked puts, I have 30 of them, and believe me, 11 longs, it's more than enough to cover all of them to roll from delta 20 to delta 10. So this is how hedge should look like. And by the way, it's not the only hedge which I have, it's just one of them. So I'm pretty good hedged, and I would like to show you also the price, which is maximum loss which we can get from this. It is let me see, it's maximum loss 13,000, but don't forget that I have more than 30 naked puts, so during the life of that hedge, my 30 naked puts should bring me more than 50, 60,000 of revenue premium. So 13,000, it's a maximum possible loss from this hedge is good ratio from potential win from naked puts. This is how hedges should be applied. So it should be as cheap as possible and protect as much as possible. You can see that maximum it's more than half of million. It's just, again, it's just one of hedges which I have. I can show you another one if you want. This one, for example, it's another hedge. This is absolutely hard hedge already. It says 3 longs as just 1 short. It also was improved. It wasn't open like this. It was improved. I close shorts, and right now I have 3 longs against 1 short, and it is 75 days till expiration. That's a perfect hedge for market crashing, and it's already virtually reached the maximum loss. It's right now shows how much, 3,200 in loss from the start. No, 20, yeah, 3,100, yes, and maximum loss is 53. So it's still working for us for another 75 days. And also I have another engagements to hedges. I'll show you, it's very interesting. It is actually delta hedges, which was open with 0 delta, long term. I opened it when it was approximately 200 days till expiration. It's allowed me to open them with 0 debit, so it's no lose, and now we patiently wait till it will mature. Right now it is 154 days till expiration, probably another month or even 2, and after that I will start improving it. How I gonna improve it? It depends where market gonna be. If it will be higher, probably I will roll my longs up. If it will be here or even get lower, I will roll my shorts down and make that hedge much harder and with much higher negative delta. Right now it has only -4, could be -10, -20, and that profitability tent will be much wider. This is how I approach my hedges. You probably already saw that. I'm trying to engage earlier when volatility is higher. What I mean volatility is higher, you know that even when VIX is low, long-term options always have a higher IV than short-term. So especially when VIX is low, it's good to go out in time and create soft hedges with virtually 0 cost, and later when it will be closer in time, approximately 100-120 days till expiration, you can improve them and make them real hedges. Right now, don't worry, because some people think that it is a hedge and start complaining that when market decline they don't perform well, because it's not a hedge yet. That's it for today. Thank you very much, guys. Have a good weekend and see you next week.